Welcome back to the Big Skinny with Lou Basenese, and I'm not going to waste any time bringing in this episode's first guest, and probably the biggest guest that's in the tech world. I don't say that lightly. I have no doubt you've heard his commentary, but now you get to hear it firsthand as our audience. Let me welcome to the show for the first time Dan Ives, Wedbush Securities Managing Director, coming to us. Are you in a robotaxi? Please tell me. That would be epic if you're in a Waymo.
I'm not. I'm in a regular car.
Come on, man.
Sorry to disappoint.
No disappoint, man. You can never disappoint between your attire and your tech insights.
But in the future, it will be. Hopefully.
Yeah. How far off do you this is great entree into Tesla, right? Like the promise of Tesla now, self-driving cars, maybe humanoid robots right after that. But how close do you think we are to that future of self-driving cars?
I mean, look, like our team. We were down in Austin. We saw the robotaxis front and center. Look, it's my view. In the next 5, 8, 10 years, like it's a physical AI future in terms of robotics, in terms of autonomous. Look, and I just you talked. I heard you right before. You're like, oh, 10 years ago, like what was I doing? Like, I think in 10 years, that's really the future. And look, and it's why we're so bullish on tech and overall AI in terms of where we see everything heading.
Yeah. No, look, I think it makes sense. I think you're right. We're laying down the software layer and the chip layer for AI to penetrate the physical world. Who do you think gets there first? I mean, is Tesla the first one that really deploys it at wide scale for consumers, or do you see someone coming behind that's unexpected? Right, there's an enabler that we're not thinking about in the big tech names.
Look, I think from a scale and scope, Tesla's going to be the one. Because look, Waymo, if you just think about it, like just how expensive those cars are in basically 5 cities, it's going to be hard for them to scale.
Yeah.
So Tesla will be the autonomous, what I view as leader, but others are going to be in as well, right? Like when you look at like Uber, how does Uber play? You'll see other OEMs that they play as well. But the physical AI future, like it's not a matter of like when, like it's happening.
It's
It's just a
happening. You see
matter
it.
of how. Yeah.
And so, I mean, I think you bring up an important point. It's not a zero sum game, right? It doesn't mean like AI chips, NVIDIA isn't the only winner in that, right? AMD can still have a really good market. You see the same thing in robots and the physical AI, that it's multiple players can scale really well and multiple investments can work out.
Look, I think Nvidia continues to be the core play.
Yeah.
From a because I look, there's one chip in the world fueling it in terms of the AI revolution, but AMD, TSMC, Broadcom. I mean, the point is like there's other ways to play, and that's why, I'm a big believer in like you have to look at like the second, third derivative
Yeah.
beneficiaries of AI. Yeah, I mean, you're pulling up the ETF. It's like we talk about in the Ives AI 30, like that's my whole view. Like my whole view is that we are in a fourth industrial revolution, and it's not just about one or two stocks.
Yeah, no, I totally agree. I mean, I think you use the right term that I've used to thinking about it in second and third derivatives, right? There's the obvious first mover, first winner, but then what are the next plays that start making it from there? I got one for you. Today, someone's out talking about, I can't remember what analyst it was, saying that we should rename a new Mag 7. We should kick out Tesla, which I know you love, and Apple, which I've always loved. I've been an Apple fanboy. So this boy band is breaking up. Mag 7's getting broken up. And in replacement, bye to Tesla and Apple, we're bringing in Oracle and Broadcom. What do you think about that?
I mean, look. My view is Mag 7 as an install base and just as a broader, as a broader sort of subsector. Part of the reason that it's always going to be Mag 7 is like, look, you could be a hater or lover of Apple or Tesla, but the scale of Apple,
Yeah.
it's unmatched. Just because
2.5 billion
2.4
right
billion,
now?
exactly,
2.4?
2.5 billion, let's say close to 1.6 billion iPhones. Tesla, like when you're selling 1.7, 1.8 million vehicles, you have 10 million vehicles out, if you think about since inception. But I'm a huge bull on Oracle
Yeah.
and Broadcom. So I don't See, like I view it as like it speaks to my whole thesis. Like every dollar spent on a Nvidia chip, there's an $8 to $10 multiplier
Yeah.
across
No, that's a
the
good way
rest
to
of the
look.
tech
So
ecosystem.
it's not pick and choose. It's all of the above with these names that have established leadership in different ways and new products that are coming to market.
Yeah, and I think you could play it different ways, but I just personally believe like it's why Palantir has obviously been one of our favorite the last few years. Like it's
Yeah.
because I think like the
Confession, I
use
have no
case,
idea what Palantir does exactly, but it's a killer stock and
but
it's
they know what you're doing. No, but I'm saying,
no,
but
no,
it's like
that's exactly it. They've known for a long
they
time,
know
man.
what you're doing.
That's right. Hey, let me get this. I get a lot of flack for talking about Apple's 2.4 billion installed device, saying they don't really need to innovate terribly much. They can just iterate because that's such a big network effect. If you get an incremental margin over 2.4 billion devices, it adds up pretty aggressively. What do you think to that? I mean, do you think I'm off base there?
Look, I agree partially with it, and that's always been our thesis. I do think when it comes to AI, like you cannot be on a treadmill because it comes down to like the technology revolutions happen so quick. Apple just can't sit there as a toll collector
Yeah.
because of the developers. Because developers have choices: OpenAI, Microsoft, Google, and others. So that's why this is a very important time for Apple to really focus on when it comes to AI, whether it's perplexity, whether it's partnerships.
Yeah.
You cannot stay on the treadmill.
So do you think let's bridge the gap there because I think Apple's analogous to Meta, right? In a different like Apple's not acting yet. Meta's saying definitively we're going to spend aggressively to develop our own platform. I don't know. I mean, would Meta be served just using one of the ones that's existing? Like how frontier AI model do you need to run advertising, right? I mean, or is Meta trying to do something that we don't fully understand yet that they're going to
Well,
spend
yeah.
this money?
Well, because like you could say it's like a wartime CEO type thing. Zuckerberg is focused on like full stack,
Yep.
right? Like in other words, and I think that's sort of the difference is that like when you look at Meta, okay, you could say stocks like had a great run, it's expensive. But I could argue when you think about true AI from an advertising perspective, if he's successful and the team's successful, then this is a four-digit stock, I think, conservatively.
Yeah, it's funny. It's the big if, right? Because he invested and incinerated about 39 billion dollars on the metaverse. He wasn't right. So I again, I'm a little hesitant to trust it here. But at the end of the day, though, to your point, AI is the fourth industrial revolution. He's got one hell of a tailwind at his back with everyone else investing versus the metaverse, which was really he was a lone soldier on that war.
Sure, and to your point, look, you're gonna have some misses like metaverse, but it all and like what you talk about with Apple, I think it also comes down to install base. That's why Oracle's having the run it's having. That's why IBM's having the run. That's obviously Microsoft. So I think install base is so important when you think about what's happening specifically on the enterprise when it comes to AI.
Yeah. What are some other names that you think that people like? I look at TSMC, right? Like Nvidia's got a monopoly on AI chips. TSMC has a monopoly on every chip because they make most of them. What are some other names that you think people just lose in the shuffle? They get so focused on Mag 7. We talked Broadcom, which had its roots in mobile. Is there another big tech name that you think really deserves more people's attention that doesn't get the headlines?
I mean, well, look, first of all, I mean, my view is like on software, it's Palantir, it's Snowflake, it's Datadog that we'd be huge fan of there. I'm a big fan of like cybersecurity names because as you think about AI protecting on the cyber side, Palo Alto, CrowdStrike, Zscaler, or CyberArk, I think are very, very important.
Yeah.
Look, and it's like that's where this is all heading. It's about the derivatives that's all now starting to play out, and that's why I think like this is a market, despite whether it's Fed or just broader headwinds, geopolitical. I think the path's higher second half of the year for tech.
No, I was encouraged to see you say that for 10 to 15% higher in the second half of the year. I completely agree because everyone's overly focused on potential inflation, but not the deflation from tech and the growth that's coming from tech. It looks like you might be going through the matrix right now. So I'm going to talk through this
Yeah, it's
exciting.
I'll be in a tunnel. So little matrix.
Yeah. So
But
I love it, man. He's
I was going into the AI sphere.
I love it, man. Through the AI sphere, through the thick and thin. This is a man that's committed to his craft, gets on a live stream even in the middle of a commute, and I appreciate that. With that said, I want to give you a chance. You just launched a new ETF, right? It's the Dan Ives AI Innovation ETF ticker.
Yep.
I love it, dude. You've completely made yourself famous forever. You got your own ticker. I don't think lose would work. LOUS would not work on the NASDAQ. Ives works way better.
LOUS. It could. I mean, yeah, that could. Like LOUI. I like it.
Yeah.
It's
So tell us about it and how
thanks, man.
what came
It's
to it.
look, I mean, the origin is like I wanted a way for like investors around the world that follow us that can invest in AI and the broader theme, the fourth industrial revolution over the next decade. And this is all based on our Ives AI 30, the 30 names that we identify in our research reports that we view as the second, third, fourth derivatives. And if it's not just about Nvidia and Palantir, Microsoft, and others, and it's a dynamic list, right? Every quarter we could change who comes in, who comes out, and we've been excited. It's in terms of the adoption, and I think everyone's been very excited about it because they understand the theme, and that was really the origin of it because it's so important for investors, whether it's retail, institutional, whether they're in Australia or the U.S. To play a theme like that, and this gives them the opportunity.
Yeah, I love this because it's democratizing access. But even more importantly, I always advocate with cyber using ETFs because it gives you a dynamic as opposed to trying to pick like the silver bullet solution, which most of us are really bad at. Like you're talking about, how often is this dynamically adjusted? Does it change
Every quarter. So every quarter, and it could stay the same 30 or other. It could be three in new ones, three out, but it's all based on a research, right? Like so, over 3 million air miles the last 25 years. It gives investors the opportunity to like, this is what we do, right? It's what we eat and breathe in terms of the AI revolution and tech, and it's really to put together a vehicle that investors could play the AI theme.
Yeah. Listen, before you disappear into the AI sphere again, I got to ask you about Google, Alphabet. I've loved it because it's one of the most cheaply valued big tech names, still growing strong, trading 18, 17 times forward earnings. Do you think that's a deserved valuation because of the regulatory risk, or is it an overreaction by the market and that they'll have their day to shine again?
Yeah, look, I think that it's getting overly discounted here. I think that Salesforce and Alphabet to me are probably the two most attractively like large cap tech names. But because of regulatory, obviously, in terms of the trials, I think worry about like AI and search, what that's doing. But the most AI engineers like in the world, if you look where a lot of them, it's at Alphabet. They're going through a kind of glass half empty penalty box, but it's a name we think like this stock that has huge upside over the next like 2-3 years. They just need to get through this period.
Yeah, I agree. I think we have a chart. We might be able to pull it up. It kind of maps out the big tech based upon earnings growth expected over the next 3 years and current valuation. And Alphabet's sitting there really in the sweet spot. Not richly valued, but strong earnings growth. Dan, before I let you go, I want to just any closing thoughts. I want to thank you, but any closing thoughts you care to share with the audience?
I mean, look, first of all, congrats on this. This is awesome. Everything that you do, and I listen to all your stuff.
Thanks, man.
And I would just say, look, it's a fourth industrial revolution, okay? And I think as an investor, it's very important sometimes to like understand where the themes are going. And I think right now we're kind of going into the software phase, and the consumer phase hasn't started, and the autonomous and robotics phase hasn't happened. But I think I overall think market is underestimating what growth is going to look like in this fourth industrial revolution.
Yeah, I love it. Listen, I want to have you back on, but next time we're going to do tech analysts in cars talking about stocks. Like Jerry Seinfeld will be riding in a self-driving robotaxi.
I like it. Love it.
All right, man. Well, hey, safe travels to you. Thank you again for joining the show.
See you.
Always appreciate it. Everyone, take a look at Dan Ives' new ETF. like he says, it's a dynamically adjusted ETF, adjusted every quarter. So it keeps you one step ahead of the changes in the markets coming from insights that you're probably not going to get anywhere else. And I can say that confidently, even as a tech analyst that's been plying my craft for 2+ decades in the markets. You got to know where you can get an edge, and Dan Ives and his ETF can help you get an edge. I think if you look at the holdings, it's going to be companies you most likely know, the majority of them, but it's really about the nuance of knowing when to lean into some, to tactically allocate more to one and less to another that could really benefit you. So again, I thank Dan Ives for his time. We encourage you to check out his ETF. We also encourage you to check out thebigskinny.com's new website. Let us know if you find any bugs that need to be fixed. We just kind of upgraded it, I don't know, an hour ago. So we like to build things while we fly, and we'd love to hear from you. But make sure you're signed up for the newsletter at thebigskinny.com. Scan the QR code on your screen. Join the conversation.